Thank God it's Monday. It's a holiday, but we still do business. That's why we're coming to you on Business Incorporated with 55 minutes of packaged stories around the world of business. I'm Mini John Mekwa, and this is what we have prepared for you. Inflation is still surging in Nigeria, but the celebrations still go on. Find out how these two meet. Workers in Zimbabwe want the government to give them 100% paid health insurance. And Finland is interested in intra-Africa trade. What's their interest? What's their benefit? Good afternoon, everyone. Happy holidays, especially to our Muslim viewers. And so even though you're on holiday, let's still do business. And we're starting from the global space as usual. Oil prices slipped on Asian trade on Monday after a survey on Friday showed weaker U.S. consumer demand, and as May crude production rose in China, which is the world's biggest crude importer. Global benchmark Brent crude features, while U.S. West Texas Intermediate crude for July delivery also went down. That was down. Brent is down 0.4%, $82.33. WTI also went down, $78.16 a barrel. And that followed prices sharp surging before now. They slipped on Friday after a survey showed U.S. consumer sentiment fell to a 7-month low in June, with households worried about their personal finances and inflation. However, both benchmark contracts still gained nearly 4% last week, which is the highest weekly rise in percentage terms since April, and that's on stronger fuel demand. Meanwhile, China's May domestic crude oil production rose 0.6% on year to 18.15 million tons, and that's according to the National Bureau of Statistics released on Monday. Still in the global space, gold prices eased on Monday as investors await more U.S. economic data, while reports from last week show that inflation was stabilizing and lifted hopes for the Federal Reserve to cut interest rate later this year. I think they put that at about December. Looking at the numbers now, spot gold was down 0.4% at $2,322.24 per ounce, after rising more than 1% on Friday. U.S. gold futures fell also 0.5% to $2,337.10. In other metals, spot silver fell 1.1% to $29.21 per ounce. Platinum was down 0.1%, $957, and palladium was steady, unchanged at $889.93. Now, that issue about inflation, we saw inflation numbers over the weekend. Headline inflation in Nigeria now 33.95%. But in the midst of that, Nigerians still have to celebrate the Sallah. And so this morning, during business morning, Ladi Williams spoke to some of those impacts and how this is affecting purchasing power.
While we saw our year-on-year numbers inch up higher, we saw month-on-month reduce slightly, but the core inflation and headline inflation are still in levels that are very uncomfortable for me to say we should start throwing a merry-go-round. Inflation is something that affects everybody from the rich to the poor, but when we drill down to the numbers, we see that it is the most essential services that are having the highest hike compared to last year. Going to the shopping mall or even going to the canteen to buy food, we see inflation everywhere, and we see even producers or sellers coming up with tactics like shrinkflation in order to deal with the rising prices, because there's a limit you can transfer to your consumer, right? Now, although we see prices inch up when we compare like this festival to last year's festival, on a month-on-month basis, prices don't just jump up. It has been going slowly. So when we compare this month to last month, we probably see prices probably inch down. So maybe a tactic to have done is to have bought maybe our condiments or around 3 months earlier. On one hand, we see the CBN trying to reduce inflation by promoting contractionary policies and pushing the interest rates up. But there's a limit to this. and particularly when we have the exchange rate moving away from us.
We're staying on that with the Chief Executive Officer of Nairametrics, Mr. Ugodre Obichukwu, speaking on inflation. We saw those numbers on Saturday. Inflation, headline inflation now is at 33.95% in May relative to the April 2024, which was at 33.69%. And of course, that was released by the National Bureau of Statistics. Let's see what this means to everyone, especially in the midst of the celebration with Mr. Ugodre Obichukwu. Mr. Obichukwu, good afternoon. Happy holidays to you.
Good afternoon. Happy holidays to you too, and to your listeners, your viewers.
Yeah. So last month, when we saw the inflation numbers, we saw that the rate of increase was reducing. It doesn't seem like we can say the same for this month.
Well, I think we can. It's still reducing. Month-on-month inflation, I think we've seen I think this is the third consecutive month of month-on-month inflation that we've seen. So that should, at least, is a bit of a reprieve. All items was 2.3% in April. It has fallen to 2.1% in May. It was 3% in March. We also seen similar trend with core inflation, which is usually my own favorite inflation data, because that sort of strips out the volatile food inflation. We've also seen two consecutive month-on-month dips, which is good. It's gone from 2.4% to 2.1% to 2%. So that is also good. So yes, to that extent, we've seen dips. However, we do see spikes in transport inflation month on month. So it's gone from 1.7 in March to 2.1 in April to 2.4 in May. We've also seen a little bit of spike in restaurant inflation as well, month on month. But overall, I think there's still a lot of concern. Inflation is still at, I think, a 28-year high, if I'm not mistaken. I think the last time we saw anything close to 33.9% was in April or March 1996. So you can imagine the sort of territory that we'll find ourselves in this country. So pretty much high inflation. Core inflation is also at 26.4%, which is also higher than the 26.2% we saw last month. And then even on an average, if you look at average inflation rate, which a lot of people tend to look at as well, especially for long-term planning, average inflation rate is getting close to 30%, currently 29.1%. So it's still a lot of challenge out there. And a lot of people who look at these numbers will also tell you clearly that maybe this doesn't even reflect their own personal inflation stats. People are telling you that they are seeing prices of goods and services more than double already, perhaps maybe because of the festive season. But we're seeing prices go up a little bit of basket, just a small piece of tomato out there, maybe like 4 or 5 pieces, and it's going for like 2,000 naira. So as much as people would look at 33.9% as inflation numbers, but the reality for a lot of them is the actual amount of money they have to dole out every month. Purchasing power is getting thinner and thinner on a daily basis. People are really struggling, and no one really knows how we get out of this. But so far, so good. At least the only silver lining here is that month-on-month inflation seems to be dropping.
Yeah, well, Mr. Obichukwu, I was hoping you would not mention tomato, because tomato and pepper are areas you don't want to mention to any woman at this time. It's really a big deal. And I know about 2 weeks ago, the NBS had hinted that they're going to reorientate the baskets measuring inflation. Perhaps if they do that, I hope they won't do it the way they did the unemployment data, then it might capture more realistic numbers of inflation and purchasing power in the country.
Yes, I agree. And without, being prejudiced to the outcome of their rebalancing of the basket, which a lot of us have called for years, I think it's been overdue for over 3-4 years now. A lot of what the MBS considers as what Nigerians spend money on has changed over the years.
Looks like we have a little bit of technical hitch there with Mr. Obichukwu. We hope to have him back because we certainly do have a lot to explore. For instance, he did mention that the fact that there's a spike in transport inflation, but we know that another major driver of inflation numbers in the country is food. It's a major one. And okay, you're back, Mr. Ogudre. Thank you so much. So, okay.
Apologies for that.
Yeah, please go ahead.
Yeah, so what I was saying is that it's about time they change that basket. And I agree with them that they change the basket because what we consume now is not the same thing as what we're consuming several years ago when we currently use this basket. For example, we all consume a lot of data, and data is a major cost for a lot of people. So that basket needs to change. However, if it does change, I think a lot of people will be careful to see whether it reflects their reality. Now, whether it means lower inflation or higher inflation, at the end of the day, data is data, but people would always relate data with their reality. So if the reality is not what is reflective of what they are seeing, if the data is not reflective of their reality, I think that sort of discredits the entire thing. And I want to believe that the MBS is very much aware of this, and they will definitely, provide what people would believe in. They will provide data that people believe in. What is important as well is that let us even have an inflation number, inflation basket, a CPI that is reflective of what we currently consume. And we all know that it has changed drastically. If you ask me, I don't see how it would improve the numbers. I doubt it. I probably think it might even be worse than we are currently seeing. But what is important is that let's even use the right data. I think that's what's important for us.
Yeah, a lot of people have already said that they do think that the numbers will look worse. But at least, as you said, if we have data that actually captures the reality, then we can have where to work from. And talking about where to work from, I was just talking about the drivers of this inflation. You mentioned transport. We hope that with Dangote's petrol, it's supposed to start next month, we've been assured and reassured that will help in that aspect. But it seems one area that we're still waiting for reprieve is the area of food, which is also a major driver of inflation number in the country. And we've seen insecurity continuously stop farmers from going to the farm, thereby reducing supply of food to the country. That's why you mentioned tomatoes and peppers and, everybody's hearts, it goes into their mouth.
You're very correct. And the fascinating thing about the inflation issues that we're experiencing at the moment is how complex it is. So it's one thing to ascribe inflation to exchange rate depreciation, to removal of fuel subsidy, and all of those things. Yes, they do impact inflation, but there are still structural issues which also bedevil inflation, which you've sort of like spoken to. There's insecurity. It's still there. There are farmers who can't even get produce from one part of the country to the other, and farm yields are still pretty much low. And you're also seeing a lot of players in the supply chain closing shop. We put up an article yesterday where we interviewed farmers to try and find out why egg prices are skyrocketing, and they're telling you that look, most poultry farmers are also closing shop. So yes, apart from the fact that feeds are expensive, but even the value chain itself is now reducing because a lot of people are saying, look, man, I can't bear this anymore. I'd rather just close my business and look for something else to do, maybe jackpot or whatever. So these things all add to inflation. So yes, it's one thing, for Dangote refinery to come on stream, which we all have been waiting for. That would help inflation to a large extent. But a lot of structural issues still remain. And a lot of these things are issues that have, that might take time to fix. And so that is where I worry. For us. And remember, there's still that little issue of minimum wage and what impact that might even also have on broader inflation. So we're not out of it yet. Inflation is likely going to be sticky for a long time, and it's not going to be an easy ride. And that's why when I hear people say, oh, maybe inflation is going to taper down towards the end of the year, I'm not that optimistic because I feel like there's still a lot of price adjustments that needs to be made. A lot of organizations have not yet adjusted their prices yet to reflect their own reality. Remember, a lot of company profits we've seen over the last few weeks or few months have all resulted in losses. A lot of them have taken on losses, yes, albeit paper losses. But at some point, they have to find a way to clean up their balance sheets. So you're still going to see a lot of price adjustments happen down the line as things start to improve for people. So inflation is not going anywhere soon until maybe we start to see a lot of the structural issues and a lot of the other issues that affect inflation start to, reduce. And that it's not something that you see happen in the next 6 months. I doubt that you even get that in the next 1 year.
And the central bank governor has told us that as long as inflation is surging, interest rate is going to keep going up. And we know also the after effects or the spillover effect that has on the real sector.
You're correct, and speaking to the central bank as well, you do know as well that there's also an aspect of the central bank's monetary policy tool that is also affecting businesses, albeit they're doing it because that's the only tool that they have to fight inflation at the moment, which is increasing NPR. So that is also a sticking point. So interest rates for borrowing is at multi-year highs, at over 30-35%. And so businesses have got to find a way to pass that cost through. So, and you can't blame the CBN. That's the only tool that they have to fight inflation, even though that has its own negative effects. So those are the challenges that I see down the line. I hope you can still hear me. Yeah, yes. Those are the challenges that I see down the line. And without putting all these things in a bucket and trying to find out, perhaps a long-term view of solving it, we're always going to come back here. And that is why we've always said, look, we do have a coordinating minister of finance. We have, the sort of central bank that lots at hope for. We have
So I think we have that break again with Mr. Obichukwu. Mr. Obichukwu, can you hear me?
I can hear you clearly.
Okay, so we lost you again. You want to conclude your
I'm sorry. By the way, I don't know. We've also been hearing that network issues have inflation has a lot to do with network issues.
Oh,
but that's
wow.
a story for
There's inflation on the network now.
I'm telling you, trust me, there's a connection there, but that's for another day. That's the story for another day.
Yeah.
Anyway, so the point I'm basically trying to make is that we need to have authorities, that's the central bank, the Ministry of Finance, and everyone who is in charge of the economy sit down and tell Nigerians, look, this is where we are on inflation. This is our inflation target in the next 1 year, in the next 2 years, in the next 3 years. We currently don't have that. A lot of the inflation targets that we see was in the outdated MTEF. That's the medium-term expenditure framework. So we need to see inflation targets that is clear and how they plan to bring down that inflation. If you're raising interest rates every time you have MPC meeting, what is the inflation target that we're trying to achieve? What are we trying to do with security, and how is that going to impact on inflation? In terms of Dangote refinery that you've mentioned that's going to come on stream, what impact would that have on inflation? So we need to see a lot of this research done by the team and a lot of these targets put out there so that maybe people can start to have a sense of, okay, you know what, maybe let's just buy into what the government is trying to do, and they've given us 1 year or 6 months or 2 years or whatever for these things to start to dissipate. And then we can start to track, which is exactly what the Buhari government didn't do the last time. So let's see that happen. Because I think that is really where we need to be now. Because as things stand, there's just so many issues, a myriad of issues that is affecting inflation rates. And I don't see how we solve this in silos. So the central bank can't be fighting inflation with their monetary policy tool, and then you have the fiscal side not also try to fight this in their own way, and which we're not seeing much of. We don't know what the plans is in terms of insecurity, how you plan to help farmers, what sort of support that you need to help with the value chain, that we see that is reducing on a regular basis. How do you deal with imported inflation? By the way, imported food inflation is also like at almost at multi-year high as well. So it's as if there's a barrage from all over the place. And right now, what you need is, a collaboration between fiscal monetary policy and then them sitting together and crafting out a plan. Nigeria needs a plan, a new plan, a growth plan. Nigeria just needs a very clear plan, a new deal on where we go from here. At the moment, that is what is lacking.
Yeah, well, I think a lot of people will tell you, Mr. Obichukwu, we do have plans, and they all sound beautiful if we go back to our papers. But when it comes to implementing those plans, it seems, something just happens and we miss it. But as you said, there are so many faces to this, and we hope to get the solution as we continue talking about it. But thank you so much, Chief Executive Officer of Nairametrics, Mr. Ugodre Obichukwu, for your time, and do enjoy the rest of the holiday.
You too. Bye.
So it might be harsh. Inflation is high. Tomatoes might be almost too expensive, but we'll get through it. We're Nigerians. We're strong. Let's take a break. When we come back, we'll head to the market. The markets are closed today, but I wonder what Aniti has to tell us. He does have something to tell us. So join us after break. Welcome back to Watching Business Incorporated right here on Channels Television. We head to the markets now with Aniti Edits. Aniti, good afternoon.
Yes, good afternoon. And happy holidays, even though we are both at work, but it's happy holidays.
Yeah, essential workers.
Essential workers. And might surprise you to know, maybe not surprising, that almost all the markets are on holiday. So it's just maybe about two markets around the region. So now let's tell our viewers around the world more about markets at, not at intraday, but this time more of a review of Friday and Thursday. And starting off first on the African continent, where we see Nigeria's stock market trying to get back to that 100,000 level, which it left a couple of weeks ago. But it closed Friday up by 0.09% at 99,925.88. And so far, the market has gained about nearly 400 billion naira in just 4 trading sessions last week. The markets are on holidays, but as at last week, the market went up. And then the year-to-date performance at plus 33.6%, while month-to-date very much in the, well, not too much in the positive, but 0.6% for the Nigerian market. And for South Africa's market, we see 0.88% as at Friday, 77,000 points, 77,053.78 for that market. On the other side of the market, it's also still tracking last week, Thursday and Friday, for Egypt's stock exchange as well as the Kenyan stock exchange. Now, from there, let's talk about the FX trading on the FMDQ last week. We were still reviewing last week's performance. We see the foreign exchange market on the FMDQ exchange, where we see that the transactions carried out there, it fell by 26.14% week on week to a total of about $902.97 million as of June the 14th. So that's it for the FMDQ market. And the decrease was, it came along with a 26.04% drop on the FX spot segment. And this was largely driven by more than 89% in the turnover from the derivatives segment. Now, if we have that slide, let's take a look at what the market will be expecting in the course of the week. First, we're starting off with today, where we see a 2-day Muslim Eid al-Kabir holiday for the financial markets, the discount houses, the banks, the insurances are all on holiday. So today and tomorrow, Tuesday, the markets will be closed. But in the later part of the week is a holiday shortened week. So Wednesday to Friday, here's what we're expecting. Starting first with the bonds market, quiet trading is expected, and this is because the Debt Management Office has rescheduled this month's bonds offer, which has now been shifted to Monday next week, June the 24th. So traders are expecting that this will cause players in the Treasury bonds market to remain on the sidelines while reshuffling their portfolio in preparation for the auction. And then as well, investors are also maintaining a medium-term expectation of elevated yields on that. And that's for the bonds market. For the Treasury bills market, the yields there are expected to maintain a downward trend amid excess liquidity. And for the money market, the overnight lending rate is expected to remain lower in anticipation of about 29.84 billion inflows from the federal government of Nigeria bond coupon payment and 15 billion worth of OMO maturities. And lastly, for the equities market, where we see on the screen there, we're expecting that when the market resumes on Wednesday, Wednesday just in a couple of days from now, mixed performance is expected. So far, the market is in green territory, but mixed sentiment is expected when the market resumes. And this is because there's a lack of significant drivers to buoy investors' interest over the near term. And then, of course, at some point, we're gradually approaching the end of the second quarter and the end of the first half of 2024. So and not to mention the direction of activities may also be driven by the upcoming share issuances by banks. They're all racing to meet that minimum capital requirements across all parts of all of the where they fall into in the tier 1, the tier 2, and the tier 3 category of their markets. Now, moving over from there, we move over to the United Arab Emirates, where in the Middle East, both of the markets were in mixed trading session at intraday. The Abu Dhabi by 0.5%, 0.51%. That's for the Abu Dhabi, and for the Dubai FM in the green, 0.09% at intraday. But on the reverse side of the market, we see Saudi Arabia and its counterpart, Qatar Stock Exchange. This is for Thursday, just last week. They're observing the Muslim holiday, which is all celebrated all around the world as we speak. So the markets most likely will extend their holidays into tomorrow. Saudi Arabia trades from Sunday to Thursday, but since Thursday last week, the market has been on holiday, so no trading on Sunday, and the market is still observing the public holiday, the Eid holiday, and the same thing for the Qatari Stock Exchange. So that's why you see it on this level as at Thursday. Now let's move from there to the U.S. markets, where we see the stock futures are little change in the start of it's also a holiday shortened week for the markets. Futures tied to the Dow Jones Industrial Average, they dipped by 0.23%. The S&P 500 down by 0.11% for the futures, and the NASDAQ 0.11%. That's where the tech heavies are. Now, the markets, the major averages they were mixed last week. S&P, the Dow Jones posted its third losing week in 4, while the S&P and the NASDAQ rallied to record highs and notched their 7th week high just last week. Now, for this week, the market will be assessing if this rally would continue with cracks in emerging market outlook. And then, of course, there will be a public holiday for the U.S. That's the Juneteenth holiday. And then when investors return from the holiday, they will be monitoring the May retail sales data, which is due out, but that's going to be on Tuesday tomorrow. And then as well as home sales and housing data start, which is coming later in the week. So that's it for the U.S. market. And finally, for the Asian markets, where we see a lot of bloodletting, red colors all around the Asian region, where we see Nikkei still flopping in between that 38,000 and is receding gradually, almost at the 37,000 level, down by 1.83% for today. The Kospi 0.52% in the red, and the Hang Seng Index down by 0.03%. Now, the markets are assessing the latest economic data from China, where we see the world's second largest economy release its May numbers for retail sales, industrial output, and urban unemployment rate. So that is taking a toll on the market. Now, for the Australia ASX 200, we see the market down by 0.31%, and this is ahead of the Reserve Bank's of Australia's rate decision, which is coming up on Tuesday, just a couple of hours for that market, because they're several hours ahead of us here, about 8 hours ahead of us. So we'll be looking at what impact that will turn out for the markets across the region and in other parts of the world, if it has that impact. So that's it for the markets for intraday, which is for US, and for Monday for Asia markets.
All right, Anisi, thank you so much for that. We'll talk to you again tomorrow. Let's head to London now, where you will not believe, just when I saw the story, I had to ask, what has Taylor Swift got to do with the decision of the Bank of England? I think we have Juliana now to tell us. Juliana, good afternoon. I know you would help us put the pieces together that the decision of the Bank of England could be hinged on the tour of Taylor Swift.
Yeah, it's quite an extraordinary story, actually. Good afternoon, Innie. Whether or not you're a Swiftie, as Taylor Swift fans are called or not, you've got to agree that everybody has been overindulged with Taylor Swift this year. She was, of course, Time Person of the Year at the beginning of the year. And the reason why is because of this Eras tour that began in March. It's due to end in August, but so far it is on track to becoming the biggest concert that the world has ever seen. I think it's looking likely to gross over $1 billion US. And every city that Taylor's been in, she has affected the economy. And she's here in the UK now. I think she's got 15 shows across different cities in the UK. And there are concerns that perhaps this may impact the decision by the Monetary Policy Committee of the Bank of England on whether or not they are going to bring down interest rates. Of course, interest rates have been at record highs now for over 18 months because of inflation. Inflation is at a touching distance of the Bank of England benchmark, which is 2%. I think we're down at about 2.3%. But there is going to be an influx of individuals across the UK spending up to, according to Barclays, about £1,000 per person if you were lucky enough to get one of these Taylor Swift tickets. So we're talking people spending money, of course, on the ticket, then spending money on hotel. Of course, you want to go to a nice restaurant. You may want to buy a new outfit, get your hair done. And that is what's been tracked in other cities. And it is currently taking place in the UK. Of course, we want the interest rates to go down. The cost of borrowing is far too high. So we're keeping our fingers crossed that perhaps Taylonomics won't affect Andrew Bailey's decision next week. But according to the data, it very well could be. Wow,
perhaps we should make Taylor Swift come to Nigeria too. She could also make some difference.
That's a good idea.
But manufacturers there, even though there's an expectation of a boost in the second half of the year, but there's still the threat of scales for them.
Yeah, that's absolutely right. We know that manufacturing, not just in the UK, but across the world, has been disrupted due to so many geopolitical issues. It started, of course, in the pandemic. We know that consumers were locked down. Consumer habits changed so swiftly. That had massive impact on manufacturing. And then, of course, the war in Ukraine affected supply chain issues and exports. And then we, of course, have seen blockages in the Suez Canal. So that's really impacted manufacturers. But when you think of manufacturing domestically in the UK, another issue has been the B word, which is Brexit. Still 4 years after our tumultuous divorce, there are issues on the border. But alas, according to the trade body Made UK, they are starting to see that perhaps in the UK, manufacturing is going back to where it once was. It's bouncing back. And this is according to a survey they've conducted, reaching out to about 320 of the leading manufacturing firms in the UK. And they're looking at their previous quarter numbers. And the order numbers are good, particularly in the US. I'm not sure exactly why exports to that region are surging, but that's really good for manufacturing businesses in the UK. Most of those are run by SMEs. But then also, there is cooling inflation. There is suggestions that perhaps a cut in interest rates could be imminent. This is all feeding into the confidence which has been relayed here by Made UK.
I wonder if that also contributed to the UK equities becoming the world's sixth biggest. I think you overtook France.
Yeah, that's a really interesting story, actually, which was broken this morning. I think Paris, for the past 18 months, has been the leading city, shall we say, for stocks in Europe. But London has just taken over by a whisker, according to data released by Barclays. So the market cap of French stocks, the market cap of businesses trading on a French stock exchange are valued at $3.13 trillion US, whereas those in the UK are valued at $3.18 trillion. And this is all about political upheaval. I think the world was taken aback last week when French President Emmanuel Macron announced that snap parliamentary election. That spooked the markets. In fact, I think in 24 hours, over $258 million was wiped off the sack. So really, really worrying there. And of course, we've got our own election coming up too, but I think because the odds on are that Labour are going to take over, there is some calm in London, whereas, of course, in France, there is a fear that some extreme parties could potentially be drafting legislation that could be un-business friendly. So I think that's where Paris has been hit, and London is supreme in that ranking.
And has that affected the market this afternoon?
It has actually, but in the opposite way. So there were some gains on the FTSE this morning. They've been completely wiped out. Some really interesting stats as the Euros kicks off. Obviously, England won their opening match yesterday. So the pubs are full in Britain and the sun is shining. So expect it to get quite leery. But there was some separate data released this morning showing that there are about 80 pubs shutting down every single week. And this has a massive knock-on effect on the economy because, of course, people don't just go to pubs to get drunk. A lot of people go there to conduct businesses and have dinners. And, of course, you know, if you're employing about 15 staff and they're all getting sacked, that is going to have ramifications. That's leaked into market sentiment at intraday. The all-share INI, it's down 0.21%. The FTSE 100, the blue chip, that's down 0.29%. And the FTSE 250, the domestic market at intraday, is down by 0.08%. In the currencies market, the British pound is currently trading down against the US dollar by 0.14%, also down against the euro by 0.18%, and down against the Japanese yen by 0.09% at intraday INI.
Thank you so much, Juliana. Enjoy the rest of your day.
Thank you. You too.
Let's go to Europe now, where Germany's economy minister is traveling to Asia this week. But, it stops at China. That's where we have our eyes. They're drawing the eyes of many business leaders that are abroad. That's following trade tensions between China and the European Union after the EU decided to slap tariffs on electric vehicles made in China. We have Cassandra Sons now with the details. Cassandra, we know we've talked about this before, so what's new now?
Thanks for having me, Innie. Well, it's been a push-pull since the announcement of these double-digit tariffs late last week. As it stands now, it looks like the tariffs are set to go into effect next month and would be about 21% for Chinese companies that participated in an EU investigation and about 38% for those who rebuffed it. Now, remember, these tariffs will come on top of the current rate of 10% that are levied on all electric cars produced in China. But since the announcement of these latest tariffs, it's been a lot of back and forth between Beijing and Brussels. China is urging the EU to reverse what they're calling, quote, wrong practices. They're also urging cooperation as the way forward. Meanwhile, as you mentioned, Germany's economy minister, Robert Habeck, is in Asia this week, where he's expected to visit both South Korea and China. And he's expected to be chatting about economic ties between China and Germany. But his spokesman noted that Habeck will, quote, not be able to avoid addressing the issue of EU tariffs. That's because, of course, China is one of Germany's largest trading partners, and even some German cars that are manufactured in China, like BMW, would be hit by them. The German transport minister has voiced concerns as well about the tariffs, saying that they risked a trade war and could be especially harmful for Germany because cars are some of Germany's top products.
So do we know which companies will be affected?
Well, since the announcement of the plans, it has become more clear who's going to be affected the most and who might be able to shrug them off. Don't forget the tariffs are weighted, and those numbers I mentioned earlier are an average, so specifics do seem to matter here. Tesla, which has gigafactories in both Germany and China, says it will hike prices due to the tariffs. Electric vehicles made in their Shanghai factory are set to be hit by about a 21% tariff. But one interesting case is BYD, who will actually see a specific change of 17.4% on top of the existing 10% tariff. Now, I know that's a lot of numbers, but the bottom line is that BYD stands to be the least affected of Chinese EV companies that were targeted by this EU investigation and subsequent tariffs. In fact, shares of the dual-listed stocks surged in both Hong Kong and Shenzhen by as much as 8.8% and 6% respectively on Thursday, because these tariffs that were announced were actually less than expected. So BYD is an interesting case because it's in a brutal price war at home, but in Europe, its cars are generally on par with European automakers. So as of now, that company is moving forward with its expansion plans into Europe.
All right, what's happening to other parts of the market?
Well, European shares advanced on Monday, recouping some losses from last week. The Pan-European Stocks 600 was up 0.4%, coming off its worst weekly percentage fall so far this year. In particular, the tech sub-index led the sectoral gains with a 1.2% jump, while European banks advanced more than 1%. The Paris CAC 40 gained 0.5%. The Frankfurt DAX was also up 0.5 point, and the London FTSE was up 0.2% this morning on the opening.
All right, Cassandra, thank you so much for that. Now let's come to Africa and find out what's the latest. The latest is that the Finnish government has committed 12 million euros, that's about 1.7 billion shillings, funding to Trademark Africa to support trade-related investment aimed at unlocking Africa's economic potential. This is through reducing the time and cost of cross-border trade, where Kenya is among countries that have continued to attract TMA investment. The funding will support projects aligned with TMA's third strategic plan, which will advance inclusive, clean, and digital trade in Africa. The announcement was made in Navisha by Finland's Minister of Foreign Trade and Development. And the minister expressed his satisfaction that the progress and impact of projects supported by Finland through TMA, noting that the renewed support resonates with Finland's commitment to championing sustainable development and economic growth on the continent. And from there, we come to Nigeria. That's not very good news, because we see that even though better taxes might be collected, but it's also costing the government even more, because the Federal Inland Revenue Service, the Nigeria Customs Service, and the Nigerian Upstream Petroleum Regulatory Commission have experienced a 131% increase in their cost of revenue collection for the first quarter of this year. This analysis, based on the Federation Allocation Committee, FAC, disbursement, reports that the National Bureau of Statistics shows that these agencies collectively received 214.29 billion in the first quarter of this year, and that's up from 92.85 billion in the same period of the previous year. The FIRS and NUPRC deduct about 4% of the cost of revenue collection, while the NCS, that's the Customs Service, received 7%. The cost of collection is usually deducted at monthly FAC meeting before the federally collected revenues are shared with the three tiers of government and other statutory recipients. And in Zimbabwe, the Congress of Trade Unions says that the proposed National Health Insurance Scheme must be wholly funded by the government, as opposed to subjecting citizens to yet another tax component. The NHIS seeks to ensure that health services are accessible to all citizens in line with Section 76 of the Constitution, which stipulates that every permanent resident of Zimbabwe has the right to access basic healthcare services. The debate on how to implement the scheme has raged on for over a decade, following a resistance by the union, which stood against the introduction of yet another tax measure. The union proposes that the National Social Security Authority has the responsibility to provide resources to social partners to enable them undertake widespread consultations with their members. And in Kenya, the government has allocated $125.3 million to support initiatives in information, communication, and technology. That's the ICT. That's for 2024-2025 budget. This was revealed by Kenya's National Treasury. The allocation is set to finance several government projects under the ICT ministry and includes 8.5 million for government shared services, 5.4 million for digital superhighway, and 17.7 million for the construction of Kenya Advanced Institute of Science and Technology. Let's do crypto now with Laddie Williams, and that's the market that doesn't go on holiday.
Yeah, no holidays here, but it seems all the rams that are being slaughtered right here have all spilled into the crypto market because there's blood.
I think that's what happened. But,
yeah.
the good thing, Laddie, is we don't see a lot of different shades of red.
Yeah, well, there's some thicker versions here.
Yeah, but
like
not
Near
so
Protocol,
much.
But not so much. So it shows it's mild
So
red.
we still have more rams to kill. Tomorrow is still a public holiday.
So more rams. All right, fantastic. I hope you've gotten some rams from some of your Muslim friends. 'Cause I've not gotten any. Don't know if it's a sign of the times, but
There's
definitely.
Inflation is
Yes,
in the
exactly.
air.
I don't even want to go about the RAM prices right now. It's ridiculous. Anyway, there you have it. It's red on the screen right there in the crypto market. If you look at the sentiment, it's still neutral. It shows that traders are not sure where they want to be at this point, but it's neutral right now. They're not afraid, but they're not greedy, at this point, talking about the fear greed index. Let's look at the headlines in the crypto market. Now we see the market has lost about $200 million liquidated right there in the market. That's Bitcoin has dropped after dropping to a monthly low of about $65,000. It's dragged all the altcoins down and affected over 75,000 traders and investors in the crypto market. So those traders that were long on Bitcoin, they've been liquidated at this point, losing about $200 million. And we see Ripple is collaborating with about 10 governments in the world right now to produce their central bank digital currencies at this time. So we're seeing most of Ripple Labs will be, being used, for this collaboration. We've seen a couple of governments actually launch central bank digital currencies, but these ones are looking at using the XRP ledger to develop stable coins for the global financial inclusion. So that's how the market is looking. But let's talk about prospects of blockchain technology now, the transparency in the public sector. Let's see how blockchain can help us get more transparency with public spending. Joining us now is the Chief Marketing Officer of FlinkApp, Oladotu Kongbe, joining me from Ibadan. Great to have you on the show.
Hi, Lali. Thanks so much. It's a pleasure to be
Fantastic.
on Channels TV.
Great to have you. So talk to me about, we've seen blockchain technology been touted to solve almost all the problems in the financial world at this time. But talk to me about how it helps to improve transparency and security when it comes to financial transactions. What are the potential impacts also for traditional banking systems?
Okay, thank you once again, Ladi. Blockchain provides unparalleled transparency and security to transactions. That is undisputed, like we can't dispute that. When we look at traditional banking sector, transactions are being stored in a private database, which gives room to failure, to fraud, and unauthorized accesses, which can be very detrimental to funds of users and customers believe in the system. But blockchain comes with something different. Transactions are written on the blockchain. They are immutable. They cannot be changed. Once you've written transactions on blockchain, you cannot go back and change them. Save for the sake of, okay, let's say there's a consensus mechanism and people generally on the network are very, very aware, and they come into a conclusion that, yes, we want to change this. So blockchain provides such infrastructure where changes can rarely be made except everybody is notified. But imagine we have such systems in banking sectors, traditional banking sectors, and all changes are being transparent. This will give room to beliefs by users and customers. There's a recent incident of Heritage Bank folding up and all that. If you have systems like blockchain in place, this can curb issues like this. Everybody's kind of skeptical about putting money in banks right now, but blockchain will bring transparency. And also, blockchain has a lot of automation that can be used for operational cost and all that. Reducing cost and also security is being put in place. So transparency is very, very basic for blockchain, but in traditional financial systems right now, we are still struggling with transparency. We are still struggling with security. So blockchain platforms can easily bring transparency and also reduce operational cost by traditional banks.
Right. I guess, with that heritage issue, I guess it'd be easier to know who has 5 million naira, over 5 million, with the use of blockchain. But talk to me about the role of cryptocurrencies here. We keep hearing about blockchain. We also hear about cryptocurrencies. Some say the technology is what you need. You don't really need cryptocurrencies, to use a blockchain with traditional finance. So talk to me about how this is playing out with decentralized finance, that's DeFi, and how this is disrupting conventional financial markets.
Okay. Cryptocurrency and DeFi platform, they are one of the lot of applications of the blockchain. and cryptocurrency, Ethereum, Bitcoin, they are also in the forefront of financial revolution disruption right now. So, for example, you can send money through Bitcoin, through Ethereum, through USDT, borderless. It will save you time, it saves cost, it is very, very fast and efficient. Looking at traditional banking sector, before you can send money abroad, it takes a whole lot of time. At least it will take you 3 to 5 business days. That's the fastest you can get from traditional banking system. But using blockchain, using DeFi platform, you can send money cross-border in seconds, let me even say in minutes. So also, as regards DeFi, there are DeFi platform that offers borrowing, lending, and trading in a very, very automated way. You imagine you want to take loans from banks, you need to go through complex paperwork, a lot of intermediaries has to be involved. A lot of fintech will also do background research and all that. But imagine all of this has been automated in a smart contract, and it takes only a few seconds or a few minutes to get your loan, even though some might be collateralized and some might not be some might be uncollateralized. So these are like kind of disruption crypto and DeFi platform are bringing to traditional and fintech platforms. So we can see this as an improvement. Imagine getting loans, being able to lend money, being able to put your money into like something like treasury and get returns, and everything is on chain. You can see everything. You can track everything. You see where your money is going and everything. So these are like the forefront of crypto and DeFi products that is being brought to traditional financial institutions.
Okay, let's talk about cost of transactions. Now, we see some crypto blockchain platforms. You see it, people or investors would rather use those platforms because they're relatively cheaper, when it comes to sending money. But we've seen some blockchains that are in high use, and they end up, the fees, end up being expensive. So you're spending so much, to send money over the blockchain. So it seems the blockchain technology has not solved that issue when it comes to fees, transfer fees.
Okay, as regards transfer fees, this is very, very common to almost all technologies, and we have to agree that the blockchain technology is kind of nascent, like it's still in the early stages, and a lot of changes are coming into place. But there's a lot of potential that blockchain can bring when it comes to reduce fees and transactions. So technically speaking, high transaction fees on blockchain is as a result of high usage when users are very high, especially the blockchain, the Bitcoin blockchain and Ethereum blockchain. So gas fee goes up whenever there are high transactions to settle. So miners would actually pick up transactions with higher transaction fee, and this is just like the typical human nature. I mean, you have to put your mouth where your money is and all that, since there are a lot of infrastructure put in place to make the blockchain very secure and very, very fast. But as more users are being adopted and more widely adoptions are being onboarded, we are going to have a lot of cheap alternatives. We have a lot of cheap alternatives to Bitcoin and Ethereum already. We have Solana, we have ICP. All of these blockchains are very, very fast and cheap. So the technology is still very, very nascent, and there's a lot of room for growth, and it can only get better.
Okay.
So as regards to fees, this is the way forward. It can only get better.
Right. We'll definitely keep watching. I guess the technology is somewhat getting old at this point. It's over 10 years now, but I guess there's still room for growth. Thank you so much. It was great having your perspective. Oladoto Akongbe, CMO of Flinkcap. Thank you so much.
Sure, you're welcome.
So that's how the markets are looking today. But I guess the very big, important question right now is where are we going to get Ram to eat after all of this today?
Laddie, you should have asked your viewers. You've been talking to them.
Yeah.
Or even
maybe
your
the viewers
guests.
can help us at this point. We need Ram. Yeah.
Laddie is looking for his Ram.
I'm looking for my Ram.
Okay, I'm sure they'll respond to you.
After the show.
Thank you so much for being a part of this, holiday business that we did. We'll do another one tomorrow, God's grace. But remember, you can always go to our YouTube channel to watch Business Morning, Business Incorporated, whenever you want. I'll see you tomorrow. I'm John Mekwa. Laddie needs a Ram.